Russia's invasion of Ukraine outweighs other burning issues in politics and global markets. Unfortunately, the events are unfolding in such a way that fundamental market laws are taking a back seat. The same is true about the economic calendar. However, the U.S. non-farm payrolls, which are due today, are a report of crucial importance for the U.S. Fed, the U.S. dollar and the stock market, so investors are on the alert. The major stock indexes closed in the red. The Nasdaq showed the worst performance with a 1.6% fall. The Dow Jones closed the trading day 0.3% down. The S&P 500 shed 0.6%. And today the main index, seen as a barometer of the stock market's health, is still trading lower at nearly 4,353 points. It's likely to halt in the corridor between 4,320 and 4,400 points until the market responds to the data on the US labor market. The ISM non-manufacturing PMI released yesterday unexpectedly tumbled to 56.5 points in February, defying expectations for an increase to 61. And today the US Labor Department reported that the US economy added 678,000 jobs last month. The jobless rate declined lower than expected to 3.8% in February from 4% in January. All in all, the non-farm payrolls for February have been the strongest report in the last 7 months, beating the consensus of 400,000 new jobs. Notably, the labor market lacks 2.1 million jobs to recover to the pre-COVID levels. A lot of economists reckon that the US labor market could regain its unemployment losses in full this year. In his testimony to Congress, the Fed chairman defined the labor market is extremely tight, but the crisis in Ukraine entails new risks for the economy and further inflation. The geopolitical tensions, economic uncertainty, record high inflation, and mounting commodity prices push investors into safe haven assets. No wonder the US dollar has leapt to multi-month highs. Its index asserted strength amid weakness of the euro, whose weight accounts for nearly half of the basket of 6 major currencies. Today the index topped the highest level in 20 months. It's now trading at 97.95 in the corridor between 97.60 and 98.20. Investors are sure to respond to the upbeat non-farm payrolls. Robust employment is a convincing argument for a higher official funds rate. Rising wages fuel further inflation acceleration that will assure the Federal Reserve to raise interest rates. Jerome Powell said in his testimony on Capitol Hill on Wednesday that he would support the rate hike of 25 basis points. However, the cautious rhetoric of the Fed's leader gives plenty of food for thought. So, the policymakers could decide on a sharper rate hike on March 16. The Canadian dollar firmed yesterday in light of the hawkish policy move of the Bank of Canada. The regulator increased the target overnight rate by 25 basis points to 2.5%. Commenting on the policy decisions, Governor Tiff Macklem said that the interest rates could be raised by 50 basis points at a time at the next policy meeting if high inflation persists. The next meeting will take place in mid-April. Meanwhile, the Canadian dollar is competing with its American peer. The loonie finds support from a rapid rally in the oil market, and the USD CAD pair rebounded yesterday off 1.2600. The currency pair halted its decline, and now it's trading at 1.2779, inside the corridor between 1.2600 and 1.2800. Assets traded in the US dollars commonly lose ground when the US dollar advanced across the board. As the rule, Bitcoin's dynamic is in sync with the stock market and in the opposite correlation with the greenback. Interestingly, Bitcoin's dynamic does not fit into this pattern recently. For example, on February 28, the US dollar index rose 0.38%, but Bitcoin surged almost 15%. And today, the US dollar index grew 0.66%, but Bitcoin slipped 4.5% in the last 24 hours. Meanwhile, the flagship crypto is trading at $41,250. Its growth is much more significant than that of the US dollar. Besides, some crypto fans assume that the reliable crypto could challenge the world's reserve currency. Another argument is that gold and forex reserves might be frozen, like it happens with the Russian central bank's reserves. Hence, the idea of converting assets into digital tokens looks very clever. In turn, Bitcoin is expected to climb to $45,000. Nevertheless, the firm US dollar is pushing its digital rival down for the third day in a row. Let's finish our video reviews for today. I hope you have had an efficient trading week, benefiting from our news. And feel free to leave your comments. Have a nice weekend and see you on Monday.